Welcome to the new weekly outlook for this week. We're going to go over US 30, GJ, UJ, and gold. And I have the key fundamentals on every chart mapped out for you guys so you can follow along for the remainder of the week. With the US dollar or US 30 in general, we're going to start off with some of the macro fundamentals. That includes the G7 summit that happened today. One of the things that they talked about was the Israel and Iran conflict, day 4 of airstrikes happening right now. And there was a proposed G7 summit urging Israel and Iran to de-escalate their conflict, but currently the US is blocking that because Trump wants to keep up pressure on Iran to halt its efforts to obtain a nuclear weapon. And while that's going on, the leaders of other nations pushed to cut deals with Trump individually, especially around trade tariffs. So we had that happening with, especially with the Prime Minister of Japan, where they met for about 30 minutes on the sidelines today, and Japan's prime minister was seeking to seal a deal with Trump to remove the tariffs imposed by Trump, especially the 25% levies that they have. Right now, we're waiting for more clarity on the progression of these talks, but as we get more clarity, you're going to see those effects in the markets as well. When we're looking at the US dollar, particularly, you have the oil prices that also surged on Friday following the Israel and Iran strikes, which could add to the inflation pressures that are already building as a result of Trump's tariffs on US trading partners, which is expected to play right into the decision of the Fed on June 18th, where the Fed most likely is going to say that they're going to hold out on the interest rates, but they're also going to see what kind of impact does the oil prices surging have on inflation, and then they're going to continue with the rate cuts or potentially even holding out the interest rates further into the remainder of the year. Also, there's going to be a very high chance of updated projections on the outlook for additional moves, and most likely investors are going to be watching to see what Powell ends up saying for any potential hints around when is the Fed going to be moving on the interest rates and what is going to cause that. So along with the tariff news, Israel and Iran conflict, if there is anything else. So there's going to be a heavy emphasis from the investors on that as well when it comes to the press conference. We saw equities also pushing higher as the fears subsided on Israel-Iran conflict, that it would escalate any further given that Tehran wants to restart talks over its nuclear program. The focus remains on the geopolitical headlines, but as long as the conflict remains limited between the two countries and there's no other involvement from additional parties, the impact is expected to remain pretty minimal on the equities, and it's expected that there's going to be a longer correction on the bullish run should there be any inflation spiked on the back of higher oil prices. Also, when it comes to US 30 particularly, the bulls remain in place as expectations of tariff release in the long term is still underway. With that being said, two of the core economic data points that are going to be coming out this week for the US is going to be the core retail sales, which is going to happen tomorrow, June 17th, and then the Fed rates on June 18th. Let's take a look at the technical side for US 30 here. Starting off with the weekly time frame, we're sitting at a very crucial level where this week we had a gap down and the price came back up and pushed. It was sitting right at the support level, which is a very strong support level from the left here, as we can see. So that's going to be our 42,000 mark, but you can adjust this as you drop down to lower time frames. I'm just using a whole number so it's easier to remember. Then we have a top wick rejection this week already into 42,700, and that is our range that we're trading into right now. Looking at the daily time frame, we see that there's a massive push up from April 2025, and then we come up and we kind of hang around this 42,700 area, unable to really break past that. And then last week on Friday, we had that massive push right back down. That is again because of the Middle East conflict that's going on. And then right here on Monday, we had that push up where the market pretty much rebounced. And then this is the new daily candle that just started forming. What I'm going to do is also mark off this kind of consolidation support here. So as long as price can break below that, we're looking for sells on US 30 below that 42,350 mark, and then a continuation down from there. If price simply makes a bottom wick rejection and then flips back up, then we're looking for buys to come into 42,700 and potentially even entertain any continued bullish momentum coming right into this consolidation resistance. Come on to the 4-hour time frame. You see that consolidation up top here a lot more clearly between 42,800 and 43,000 mark. And then when we're looking at the current range on that weekly range, it was a massive sell-off, some corrective moves. And then we came back up, breaking previous highs. And then the current 4-hour candle also breaking previous lows to come back and sit into this area. Once again, your sells are only valid below that 42,350. And if you're looking for any buys, you're waiting for a bottom wick rejection here to be formed, a support to be formed, and then a push back up into 42,700 and a continuation up into 43,000 if the bullish pressure remains. We are still in that bullish structure from April. Now coming over to GJ. From GBP perspective, you have CPI coming out, and then you also have Bank of England's interest rates, which are going to be coming out as well on June 19th. And from there, you also have retail sales, which is going to come out in pre-London session. So June 19th and then pre-London session of June 20th as well. CPI data is going to be coming out in tomorrow's pre-London session, so June 17th and then June 18th pre-London session. When we're looking at the Japanese yen, you also have the interest rates coming out from there, but that's going to happen today in Asian session. And Bank of Japan is expected to maintain the 0.5% rate that they're at right now, with potential for higher rates by the end of the year or even January 2026, which is what majority of the investors are betting on, given more clarity around the global trade situation, especially with getting more clarity around what happened with the G7 meeting today with Trump. And the meeting is expected to focus largely on its future bond buying plans and whether the central bank will slow its paring of purchases from spring next year. Right now, again, like I said, we're waiting on more clarity on these trade talks from today's G7 meeting, but that is also going to have a major impact on Japan's elections, which are going to happen next month. Key fundamentals, again, is going to be the Bank of Japan's interest rates, which are coming out today. You also have the G7 meeting and trying to get more clarity from there. And then on June 19th, pre-London session, you're also going to have the Bank of Japan's governor speaking. So that's going to be very important. Looking at the weekly time frame from a fundamental or technical perspective, you have that top wick rejection on the current weekly candle. We still have pretty good bullish volume, it seems like here. So that's going to be your 196.8 level. I'm going to mark off the current body low of the weekly candle at 195,300. That's the range that we're trading into. And if you want, you can also mark off these top wick rejections here. So what I would say is anything in between that would potentially be only scalp opportunities if there is a big enough range. If not, then that would be my no trade zone. And if I'm looking for buys, it would be above that 196.8. Come on to the daily time frame, last daily candle, massive push up. On Friday, we had that liquidity grab. A lot of that strength coming into the pound as well. So a massive push up, and then the current daily candle just started forming a few hours ago, a little bit of a top wick coming back down bearish. So that level that we have marked off from those wick rejections on the weekly time frame, that sits right at the bottom wick rejection of the current daily candle. So if price keeps pushing below that, then we know that we have sell opportunities to come back down a little bit further to correct that bullish push up, and we can look for sell opportunities. If price simply makes a bottom wick and flips back up and you see support being formed here on the hourly or the 4-hour time frame, then you have some buying opportunities to the upside, and you're looking at a range of almost 42 pips. So you can look for quick scalping opportunities. Come on to the 4-hour time frame, and you see all that consolidation, and the price pushes up out of that. Right now, we're kind of just retesting into that area, a bit of a gap down that happened when the market opened up. We came back, filled it with that top wick, pushing right back down. Not a lot of volume. So I would say if you're trading any JPY pairs, just wait until the interest rate news comes out from Bank of Japan, and then you're going to get better clarity on which direction price is headed. We've already been through the USD and JPY fundamentals here, so we're really not going to go over it again, but you have the key fundamentals right there. Looking at the weekly time frame, price is currently sitting in this massive consolidation since really April 2025 up until this point. So we're only going to mark off that resistance, which is the current top wick rejection on the weekly candle at 144.9. And then you also have that bottom wick rejection right here for the current weekly candle at 143.7. Come on to the daily time frame. All of that is pretty messy price action in between, but you have a zone-to-zone trade that you can take advantage of. So if I was going to trade, I would wait for price to break below this support of 144.5, only because that's that little support right here for these candles. And we've also seen fake outs right around this area and then a push back down. So you have those clean sell opportunities and a bigger range to take advantage of. Scalps turn into day trades or even swing trade opportunities. Coming down for about 80 pips or so. If price simply makes a bottom wick and then breaks that high, then you have your buying opportunities. In between, I would just stay out of that, and that consolidation becomes more clear. So I would just stay out of this, just so you have enough room for price to make any top wick, bottom wick rejections, fake outs, things like that, and you're not really stuck in a losing trade or in just consolidation. Coming over to gold, once again, those key fundamentals right here. Gold is breaking all-time highs, testing into new all-time highs with candle closures up top here. This is the new weekly candle. 3442.2. Current bottom wick rejection. 3383.4. And then headed back down, potentially into this resistance area. So that's going to be your sell opportunity for your TP for any sells that you're going to be taking below this level right here. Coming onto the daily time frame, we had some candle closures in the past into this area, but we had fake outs. So we want to see if price is going to end up doing the same thing here. If we're going to get a fake out, top wick rejection, flip back down, that's the first area of target. And then after price breaks below that, then we're looking for continued sell opportunities into this liquidity area where price keeps coming back, tapping into it, and then you see a ton of volume after that to the upside. If price ends up giving you a bottom wick and then pushes back up, then you have those buying opportunities to the upside. A pretty good range, as you can see here, right around here, coming right back into that resistance. Come onto the 4-hour time frame. You're getting some nice break and retest setups. Last 4-hour candle did not break the previous low, so we don't have enough confirmations for sells just yet. So if you're looking for sells, you want this low here to be broken and then a continuation down. Ideally, wait for a break and retest on the 1-hour time frame. And so even within that, on the hourly time frame, you had this entire consolidation that was forming up top here until you got that massive sell-off. Then consolidation here again, a huge sell-off, corrective move, created new lows here, and then got some candle closures into previous consolidation, and then a gap up and price pushing. So anything here, you want to wait until you get proper break and retest setups on the hourly, 4-hour, and then you're waiting for some highs and lows to be broken, as we usually do with our usual setups. And that's the trade that you're going to be looking for. So again, any buys are going to be above that 34,400 area, somewhere around here, and then a push back up, potentially as a quick scalp to grab some quick points pretty much coming into this area, and then let that run into 3442.2, and then if you're looking for sells, then you wait for this low here to be broken. You got clean price action to the left to come right back down here. That's pretty much it for this week. If you guys have any questions, as always, feel free to reach out, either comment below or reach out to me on Instagram at SharmaFX.